Hi everyone, this is Ted Bauman here of the Bauman Letter. Well, it's starting to get a little bit nippy down here in the southeast, which can only mean one thing. The end of the year is coming, and with that, tax preparation season. So today I thought I would talk about how to prepare for your tax filings this year if you have used any cryptocurrencies, if you've traded any cryptocurrencies. I'm going to use Bitcoin as a shorthand in my discussion, but remember that it applies to all cryptocurrencies. Now, we know that the price of cryptocurrencies has fluctuated pretty widely this year. It's been a roller coaster ride for many of the people who've been trading in Bitcoin. And unfortunately, if you have bought or sold any cryptocurrencies, including Bitcoin, during the course of the year, that's going to have tax implications for you. Now, first of all, remember that the IRS considers any cryptocurrency like Bitcoin to be personal property. It's not considered to be a currency. And that's an important consideration because when you buy and sell personal property, you are attracting personal gains. In other words, capital gains. So if you make money on the trade, you're going to owe capital gains taxes on your sale of a cryptocurrency. By contrast, if you lose money on the sale of a cryptocurrency, you're going to harvest a loss. Now, the important thing to understand is that this applies even though people customarily treat cryptocurrencies or use them as currencies, particularly Bitcoin. I mean, people still do buy and sell things in Bitcoin, even though it's been highly volatile. Now, the problem there is that when you buy something using Bitcoin, say, for example, if you have one of these credit cards that allows you to make purchases in small amounts of Bitcoin instead of using fiat currency, every time you buy something, any profit that you make, in other words, if you were to buy something with Bitcoin and get more in return for it than you paid for the Bitcoin in the first place, that's considered a capital gain, right? And the same thing goes for any losses. Let's say that you use a tiny little bit of Bitcoin to buy a meal at McDonald's or something. Well, the fact that you perhaps got less in terms of the meal than you originally paid for that Bitcoin when you bought it means that you have a capital loss. Now, the IRS expects you to keep track of every single transaction that you made during the course of the year using Bitcoin in this way. Now, probably most people haven't made too many transactions. Probably most people have bought Bitcoin as an investment. In that case, you don't have to worry if you have just bought it and held it, because like any capital asset, you don't attract any taxes. There are no tax implications until you actually dispose of it. So if you're just buying Bitcoin to hold it and you haven't made any sales during the course of the year, then you don't have any problems. But as I said, if you have been using Bitcoin as a means of transaction, for example, some people buy things on websites using Bitcoin. In that case, you have to keep track of those transactions and you have to add them up to come up with your net capital gain on your Bitcoin trading during the course of the year. Now, this is obviously very different from if you were using a fiat currency like the US dollar or the euro, because in that case, using a currency, you're not considered to be using a capital asset. So even if the currency changes value during the course of the year, becomes devalued as a result of inflation or currency fluctuation, there's still no tax implications for that. But all cryptocurrencies are considered to be personal property, capital assets like gold or your house or anything else. So that's why this particular tax treatment applies to Bitcoin and other cryptocurrencies. Now, if you get paid in Bitcoin, it's a little simpler, but the principle is the same. Let's say that, for example, you work for someone and that person decides to pay you for your work by giving you a new car, right? Well, even though you're not getting paid currency, the value of that car is still considered personal income, and you're still taxed on that personal income based on the value of the automobile. The same thing goes for Bitcoin. If you are paid in Bitcoin, even though it's not a currency, you still have to regard that and file it on your tax returns as personal income. Now that means that people who have earned money in Bitcoin, which includes a lot of consultants, have to keep track of the value of that Bitcoin at the time that they were paid. They can't just say, well, I earned X amount of Bitcoin during the course of the year. They have to be able to go back and say how much it was worth when they received it. So as you can see, using cryptocurrencies and trying to integrate it with the tax system here in the United States can be pretty tricky. But the IRS does expect you to do it. And over time, I think we can imagine that the IRS and the federal government will probably start to require a lot of the Bitcoin and other cryptocurrency trading services to start reporting on these things on your behalf. Just like, for example, your broker does with your capital gains and losses, just like your employer does with your W-4 and all that sort of stuff. So although it's probably been possible to avoid having to do all of this in years past, I think in 2018 it's going to be important to start looking into your Bitcoin trading during the year, including any purchases, any sales, anything like that, and starting to comply with the tax code. I'm not a fan of the tax code, but the reality is that it is what it is. They will penalize you. They are getting really hardcore with us ordinary taxpayers, even though, as we've seen recently, the people at the top can easily escape them if they really want to. Anyway, this is Ted Bauman. I just wanted to point out that I've got a new book out called Endless Income, and it is available to subscribers to the Bauman Letter, particularly available if you are interested in subscribing. You're not a current subscriber. It comes as a feature of the new subscription. It's got a whole bunch of tips and tricks about how to make money, how to save money, and it really is, I think, probably one of the most important things as part of your Bauman Letter subscription. So I would strongly encourage you to have a look at that and consider subscribing if you haven't already. Anyway, Ted Bauman speaking. I will talk to you again soon.